Welcome, everybody, to a new episode of Reinvent Money, where I talk to only the brightest minds about financial and monetary developments across the world. If you haven't already done so, please subscribe to my channel and ring the bell for notifications. Today, I'm going to talk with Brent Johnson of Santiago Capital. Brent is famous for his dollar milkshake theory that states that the dollar will first get much stronger before the international financial system eventually collapses and there's a run on hard assets such as gold and Bitcoin. Yesterday, Russia announced they want unfriendly countries to pay in rubles and gold for their gas imports from Russia instead of dollars. I want to know from Brent whether that's in line with this dollar milkshake theory and whether this changes the end game. Hi, Brent. Welcome.
Hi, thanks for having me. I'm looking forward to talking to you.
Yeah, definitely. Could you explain one more time briefly, because I know you've been explaining this for so many years now, what the dollar milkshake theory is and why it has this delicious name, even though it has such a bitter ending?
Yeah, sure. Well, I think the first thing I'll say is, excuse me. The first thing I'll say is that part of the reason I've been explaining it so long is that I've been wrong on the timing. I think it's always important to, if you're going to take credit when you get things right, you got to kind of, take the responsibility when you get things wrong. And I thought that it would have happened by now, and it hasn't. And the that I'm talking about is a sovereign debt crisis. And so the dollar milkshake theory is really the way I see a sovereign debt and currency crisis playing out. I thought that all of the debt in the world would have mattered, for lack of a better word, before now, and it just hasn't. The reality is that governments and monetary authorities and different central banks around the world are extremely good at kicking these problems down the road, and that's what they've done. And so the dollar milkshake theory, so that's what it is describing. Now, what it says is that I believe that, or let's just call it since the global financial crisis, you can pick just about any date you want. You could go all the way back to the 80s if you want. You could go back to the global financial crisis. You could go back to the Asian currency crisis. But the bottom line is, over the last either decade or several decades, every time there has been a crisis, the governments have dealt with it by expanding the debt, expanding the money supply, and just kicking the problem down the road. I believe that for several reasons that the debt has gotten to a size now that they cannot kick it down the road for much longer. And but the way they've done that is they have provided liquidity that otherwise wasn't there. So based on the design of the monetary system, and I don't have time to go into all the details on this, but it's a system that has to grow. It either has to move, in other words, there has to be circulation, there has to be commerce taking place, there has to be flow of capital. If there is no flow of capital, then the system has to get bigger in order to keep from collapsing on itself. And the way it gets bigger is that governments and monetary authorities increase the size of the system by either providing liquidity, increasing bank reserves, bailing out failed companies, et cetera, et cetera. But the bottom line is it either has to circulate or grow.
Right.
And over the last, when I started talking about the milkshake theory, the point that I used was over the last 10 years, central banks all over the world have provided liquidity or provided support to the markets. But that as we enter a crisis, I believe that the US, for a number of reasons, and specifically the US dollar, will suck up all of that liquidity that has been provided. And as it draws that liquidity into the United States, that means it is denying liquidity to the rest of the world. And the way I came up with the name of this is there's a famous movie called There Will Be Blood. And it's about an oil baron who, he's very cutthroat, he's very ruthless. And, there's this scene in the movie where someone who has a property next to his says, "I'll sell you my oil." And he says, "I don't need to buy your land to get your oil. All I have to do is stick a pipe down into the straw down into the ground and I can suck it up." And he says, "I drink your milkshake," basically. And that's kind of how I see it. I don't think in today's day and age, well, this is changing and we should talk about this, but over the last 20 to 30 years, the world has moved towards globalization, towards one market, a very globalized, interconnected market. And in that type of a market, the argument I made was it's not as important who generates the liquidity. What matters is who captures the liquidity. And I think for several reasons, the United States is going to capture that liquidity.
But
now,
why is the US capturing that liquidity then? What's the main reason?
So part of the reason is the institutionalized effect of having the global reserve currency. Everybody already owns a lot of US treasuries. They already hold a lot of dollars. And as a result, they have also, and they earn a lot of their income in US dollars. This is entities around the world, not just the United States. Entities around the world earn income in dollars because the United States is one of, if not their biggest clients. So in order to offset their revenues, they will often borrow in the same currency so they don't have to manage the currency exposure all the time. And so the amount of US dollar debt that has been taken out by entities outside the United States is just as big and arguably much, much bigger if you include the euro dollar system than the US dollar debt that exists inside the United States. So and if you have a debt in something, that is, you have demand for that currency that's in that debt. So all of the dollar debt in the world, just to be serviced, is a huge demand for dollars. To pay off the principal whenever it comes due is a huge demand for dollars. To trade in anything on the global stage, again, is priced in dollars. Now this is changing. We have to recognize that. We'll discuss that. But there's tremendous institutionalized demand for the dollar. And that institutionalized global demand for the dollar does not exist for any other currency. So if all currencies are being printed and all currencies are being, flooded with liquidity, but then it comes down to a matter of demand rather than supply. Because the US isn't the only one, quote unquote, printing money. The ECB, Bank of Japan, Russia, South Africa, Asia, or Australia, Canada, everybody's doing it. But they all don't have the demand that the US dollar does. So that's part of it. The other part is that the US interest rates, for the most part, are higher than most other developed nations. So if you already have to match your liabilities with your revenue, you want to hold the most liquid currency in the world, and you want to get paid the most for holding that currency, the dollar is a natural way to do that. So interest rates, higher relative interest rates is another straw. Yeah. The other part is just the amount of trade that takes place in dollars. I kind of touched on that earlier. You need dollars to trade on the global stage. So that's another part. One of the most controversial points that I make and that people don't like as much is, at the end of the day, the US controls the dollar payment system. We've seen that weaponized in the last few weeks, which I'm sure we'll talk about that. But then finally, the way that they weaponize that, the way they enforce the weaponization of that is with their military. The US, for better or worse, you don't have to like it, you don't have to approve of it, but it's important to recognize that the US has the biggest and the strongest military in the world. And if push comes to shove, they have the ability to push, and they have the ability to shove, and they have the ability to blow people up, which I don't like it, but that's the way it is. And that's the way, it's a fact. And that's the way world reserve currencies have always operated. And so for all of those reasons, I just feel that there's a much bigger demand for the US dollar than there is for other currencies. And if all countries are going to have to print their currency in order to, combat COVID or the Russia situation or slow growth, whatever it is, it comes down to a matter of demand. And I think the US not only has the natural demand, but it will enforce that demand as well. So for all those reasons, I think what will happen is the dollar will continue to get much stronger. As it gets stronger, it puts all kinds of pressure on other countries. Those countries then have to print even more in order to counteract that slowing growth. That actually makes the dollar go even higher, and it becomes this vicious cycle. So I think what's going to happen over the next couple of years is that the dollar is going to get a lot stronger. US asset prices will get stronger relative to the rest of the world. And eventually it will either collapse on itself, or the governments of the world will have to get together and write the dollar down, similar to a Plaza Accord type thing. But I don't think the monetary system, so I think the monetary system is changing. I think it's in the process of changing. You could say the dollar's in the process of dying if you want, but I think the process of dying sees the dollar get stronger before it ultimately goes away, rather than just going lower and lower and lower. If the dollar goes lower and lower and lower, the system works.
Yeah.
In other words, if the dollar goes lower and lower, people keep borrowing in dollars.
Yeah, that's of course Triffin's dilemma. That's
and then you get into Triffin's dilemma. Exactly. Yeah, so exactly. I the whole world wants the dollar lower, and because that keeps the system running. So I'm not sure the whole world's going to get what they want.
Yeah, but now of course we will see that the U.S. is tightening, the Fed is tightening, interest rates are being raised, so the dollar is getting stronger, and then you expect in a series of sovereign defaults across the world. Countries,
essentially,
companies not being able to pay their dollar liabilities.
Yeah, and so you just touched on something that's important to understand. Again, based on the design of the monetary system, money is loaned into existence. So the base money in all the central banks, that's the collateral which off of all other money is lent. It's lent into existence. So some people have argued to me that as the dollar gets weaponized and as the US gets sick of the US being the bully, they will just default on their dollar debt. Okay, so and therefore the demand for the dollar will go away. So there's two parts of this that you need to understand. Number one, in a debt-based monetary system, if large defaults start to take place, that creates a credit crunch in which lending decreases rather than increases. And commerce slows down rather than increases. And if you go back to what I said at the very beginning, the system as it's designed either needs to be increasing in speed or growing. So a credit crunch, lots of defaults, counteract both of those things. And so what happens is the money supply actually shrinks. And so if demand falls, but supply falls even more, price can still rise. So the price of the dollar relative to its peers can still rise dramatically. That's number one. The second thing is the point that I like to make is if the rest of the world decides they don't want to use dollars and they're going to default on the dollars, debt that they own, they are not defaulting on the United States. The debt that is issued that these countries and these corporations outside the United States have taken on are being lent to them by countries and entities outside the United States.
Yeah, it's mostly the euro-dollar system, right?
It's in the euro-dollar system. So in other words, if Turkey decides to default on all of the dollar debt, which has a lot, they're not defaulting on the United States. They're defaulting on Spain. They're defaulting on France. They're defaulting on Italy. And so that's Europe's problem just as much as it is the United States problem. And I would argue it's a bigger problem for them than it is for the US because we could provide them the liquidity, but the reason we would be providing them the liquidity is because they were in big trouble. We wouldn't just provide them the liquidity because they were in good shape, right? And so the argument that the US dollar debt can just be defaulted on without any pain, and that would spell the end of the dollar, I think is a miscalculation.
But there will be all sorts of knock-on effects that we have no clue about. Yes. A lot of unknowns there.
Yeah, exactly.
But then, if I understand correctly, then most of the debt is generated in the euro-dollar system, which is mostly a system that constitutes a lot of banks across the world, offshore banks, entities, private sector basically. So they have a conflict of interest then between what the Fed wants or what the American people want and what all these banks want, right? These banks want the dollar to be cheap and plentiful, right, and the system needs to keep on going. But then on the other hand, we have the desires of Jerome Powell. So can't the bankers use their clout and their force to stop this from happening, this cascading effects of default?
Yeah, and I think what you just touched on, I think is an underappreciated risk out there that I don't see a lot of people talking to it. I've talked to a few people about it and they agree it's an issue, but I haven't seen it much in the kind of the popular press or other than just, a few conversations here and there, is that especially with the potential rollout of digital currencies by sovereign countries, I think there's a potential battle brewing between what the Fed and the governments want and what the banks want. Right? The banks are not going to want to just be utilities that do what the Fed tells them or what the government or the Treasury Department tells them. There's a lot of very powerful, very wealthy, very institutionalized people that work for the banks, and they're not going to like that their situation in the world is now jeopardized. They can, and if you look and see what the banks are doing, they're not really lending. their job is to lend, but they're not really lending. What they're doing is they're taking their money and they're buying treasury bonds. Well, what do they know that the rest of the world doesn't, right? The treasury bonds continue to lose value, but the supposedly smartest people in the world are still buying them. So it's kind of an interesting situation. It's a game of chicken, I think, for lack of a better word.
Yeah, and then before we start discussing the most recent developments, Saudi Arabia, Russia, etc., could you first explain then how the final stages will be? So I understand how the US will suck up all the liquidity, the US dollar through the straw, and then so we will see a lot of other currencies completely being trashed, and we see countries defaulting. But then what's next? So because I believe, according to your theory, then the next stage would be the dollar also collapsing on itself, and there will be a run towards hard assets such as gold, for example.
Yeah, so I think there's actually a middle stage there. So I think initially countries around the world come under extreme pressure and you start to see sovereign defaults. I think those sovereign defaults, they haven't yet. They've been pretty much contained so far, but I think we're getting to the point where those individual sovereign defaults will now start having knock-on effects for other sovereigns, such as Turkey. I think Turkey's in a lot of trouble. They were in a lot of trouble last fall. They've kind of gotten it under control short term. I have no doubt that it's going to, kind of explode again. And when it does, I think that will be a real problem for Europe. I think Hong Kong has a huge problem, and I think when the problems there are realized, it will be a huge problem for China. And if China has a big problem, then the whole world has a problem. So I think there's going to be a stages of this, and this isn't something that I think happens over 6 months. I think this happens over 2 or 3 years. There will be a thing where the dollar goes higher. It causes a bunch of problems. They get it under control for a while and everything kind of goes back to relative peace. And then another crisis develops. And so I think it'll kind of be a back and forth stair-step higher. But ultimately, yes, I do think that the system is just not designed in a way for a really strong dollar. This is partly why the Plaza Accord happened back in the mid-'80s. Now, for people who are younger who don't remember, just give me 2 minutes and I'll rewind things back, because understanding the history is important. So in the 1970s, the US was on a gold standard, which meant if you didn't trust the currency, you could turn the currency in and get gold. Well, France decided they didn't trust the currency, so they started asking for their gold back. And so then in 1971, or was it 71 or 72? I can't remember. Then Nixon
71
removed the convertibility. And, then to pay for the Vietnam War and a bunch of social programs, they printed a lot of money, for lack of a better word, and you saw inflation really, really high in the 70s. Well, then in the early 80s, a guy named Paul Volcker became the Fed chairman, and he was bound and determined to fight inflation and stamp it out. And so he raised rates like, 20 times in a row or something like that. And interest rates went from single digits to the high teens. And as a result, then money started flowing back into the dollar. The dollar got stronger. Inflation came down. But it made the dollar so strong by the mid-'80s that now we got back into the same problem we had before. Remember what I was talking about before, is the dollar stronger, it puts pressure on the rest of the world. And it made it harder for the US to compete on the global stage because, our goods were now more expensive than the rest of the world's. And so the system just it's not designed for a strong dollar. Think about it like going back to a gold standard. If you were on a gold standard and the price of gold was going really high, that would tell you that the economy was slowing down and it was sucking money out from the economy into gold, and the gold prices rising. So in a leveraged system, you don't want the underlying collateral to be rising in price. In a leveraged system, if the underlying collateral rises, that means the asset prices are coming down, which is not good. So fast forward to the mid-'80s, now we're on a dollar standard. We're no longer on a gold standard. The underlying collateral is rising in value very quickly. It's putting lots of pressure. Asset prices are coming down. People are in recessions. So they didn't want that. The system is not designed to handle that. So they had to figure out a way to weaken the dollar. And so this was the Plaza Accord. And so the dollar went from, the mid 150s, 60s in the middle 80s down to 100 over the next, call it 4 or 5 years. But that was artificially done. They artificially weakened the dollar via the Plaza Accord. And they did that in order for the system to survive. Now we're kind of getting back into that same situation again, where the dollar is strong versus other relative currencies. We're having a highly inflationary environment. If the Fed keeps raising rates in order to counteract inflation, one of two things can happen. Either the dollar gets a lot stronger and starts to crush the rest of the world, or it does tame inflation, or they're not able to raise rates because it will crush the economy. And then you get a sell-off, in which case the dollar goes higher as well. But in either case, I think that the dollar goes higher. And I think what's going to happen is we're going to end up in a situation back to how we were in the 1980s, right? And so they're either going to have to come in some kind of an agreement, write the dollar down, devalue it overnight, whatever it is, or just come up with a whole new system. But again, going back to the institutionalized effect of the dollar, there is so much incentive to keep the system as it is going, that the world is not just going to get together out of the blue and redesign the whole system just for the heck of it.
Yeah, the incentives are the best then for because for the United States, it was an exorbitant privilege, but now it's becoming a burden, because they outsource their whole production capacity to the US. So a lot of people in the US also don't like it anymore, especially defense doesn't like it so much anymore. So for the US, it's not really working in the long run. And I guess most other nations also are fed up with it. So in whose interest is it to keep this system alive? Maybe for the banks in the euro-dollar system, but who else is profiting? Well,
this is where it gets interesting. It's the U.S. will still want the global reserve currency. The exorbitant, I believe, now people disagree with me on this, but I still believe that the exorbitant privilege outweighs the exorbitant burden. Now, that doesn't mean they don't want the dollar at a lower price. I'm sure if they could figure out a way to get the dollar to 75 rather than 100, but maintain the global reserve currency and all the perks that go along with it, the U.S. would like to do that. And, if you go back through history, global reserve currencies are not typically surrendered and handed over to somebody else. They're typically taken, right? And under any of these scenarios, other than the US coming out tonight, overnight, and devaluing the dollar tonight with no warning, and they just do it, I don't think that we transition from the dollar to another system or another way without the dollar going up first. Now, it is possible that they come out tonight or tomorrow night, whatever it is, and out of the blue devalue the dollar by 30, 40%, in which case the dollar won't have gone up. It will go down dramatically. And, the dollar milkshake theory will be wrong. But if they don't do that, I think any other scenario eventually leads to the dollar going higher. And the dollar going higher causes all the pain, causes all the frustration, causes all the volatility, causes all that is the catalyst that then gives the politicians and the governments cover to come in and write it down. In other words, if the government came out and wrote the dollar down tonight, overnight, when we're already having inflation, that would double or triple inflation just like that. Exactly. That would be politically unacceptable. Yeah. So in order to print the money, in order to write the dollar down, you need to have the pain of the dollar going higher first. And so that's how I think it will play out.
Yeah. And what about that final stage then, that the dollar eventually will, let's say there will be like a Plaza 2 agreement, but then people come together and the design a new system. How would that look like then?
Well, I don't know. My guess is that governments around the world will not willingly go back to gold. I'm not saying they won't do it. They all own gold. It would be easy for them to do it. It would be the easiest thing for them to do because they already own it. It's already on their balance sheet. They can just reprice it higher and it kind of brings their balance sheets back into balance. But I think that's the last thing they want. They've spent the last 50 years trying to get gold out of the monetary system. So for them to now just all of a sudden put it back in, it would be hard for them to do it without looking like bigger hypocrites than they already look like. Not impossible, but hard. And it would then put handcuffs back on them, which I don't think any politician or dictator wants handcuffs put on them. But they own it, they could use it, and in some kind of a emergency scenario, they may be forced to use it in order to bring confidence back to the system. But my guess is that it will be some kind of global basket of currencies. Maybe there'll be some commodities in there. Maybe there's some gold and oil in there as part of it. I don't think they're going to go to a Bitcoin standard, or I don't think, I think there'll be national digital currencies by then that could all be represented. But I think what happens that when they ultimately get to the point where they're either redesigning the system or writing the dollar down, hopefully at that point you will be selling your dollars and your dollar-based assets at really high prices, and then going and buying the assets around the world that have been beaten up or knocked down. Because once they announce that the dollar is getting written down, then you're not going to want to be in dollars. You're not going to want to be in US assets. You're going to want to be in the other parts of the world that are now reflating.
Yeah, and then we switch back to recent events. The dollar used to be relatively safe, but now we've seen it is weaponized, and you cannot really, as a foreign entity, no matter whether it's right or wrong, but you cannot really rely anymore on the dollar as much as you could in the past. And of course, I'm talking about Russia, but also China could think, okay, well, if it happens to Russia, it would also happen to me, especially if the US starts writing off the dollar, then and they're long dollars, of course, that could have a huge effect on China. So is it my point is, don't we really need a neutral asset instead of having another fiat as a world reserve currency, or even a basket? If you have a basket and you still have the risk of the basket being frozen. So are national actors not looking for something more neutral at the moment?
Well, this is kind of a double-edged sword again. How do I say this? The Bretton Woods system was about the closest to a neutral system as we've ever had, because it was a US currency that was a reserve, but it was backed by gold. Okay, so the US still had a lot of control, still had a lot of influence, was the global superpower, but there was a check on them because of the gold standard, right? So I think, again, this was kind of something that was kind of forced on the world in order to come to an agreement. But I don't necessarily think any one country really loved the idea of backing it with gold. Because at the end of the day, gold puts handcuffs on you, right? It puts handcuffs on the government. Governments like to spend money. They like to make promises. They don't like to be constrained in any way. So it may be that some kind of a neutral system is put in place because that's the only thing that everybody can agree on. But what I would say is that as soon as they get that neutral system in place, governments around the world are going to start chipping away at it.
Of course,
the very next day. Yeah. And I unfortunately don't think this is going to happen without a military conflict. I really don't. I hope I'm wrong.
We already have the conflict, of course.
We've already got a conflict going. So the idea of a neutral reserve asset, I understand the concept. I think it makes sense. But, at the end of the day, the biggest boy on the block usually makes the rules. It's kind of like the playground. And, it's no doubt the world is sick of a bully. But, what happens is usually when the bully gets knocked down, there's a new guy that steps into his place and he becomes the bully. It usually doesn't lead to peace and harmony.
But right now we have several bullies, so it's.
And now we've got. I mean, I think it's fair to say the U.S. is the biggest bully, but there's other bullies. This is something else that you touched on. I think this is important for people to consider, because it goes towards trust. Now, with everything that the U.S. has done to Russia in the last couple of weeks, can you really trust the United States anymore? Well, maybe not. Maybe you shouldn't have been so trusting to begin with. But the flip side is, just because the US is no longer trustworthy, that does not mean that China is trustworthy. It does not mean that Russia is trustworthy. It doesn't mean that the people in Frankfurt are trustworthy or the people in Tokyo are trustworthy. So I think people need to be very careful of jumping out of the frying pan into the fire. The idea that Russia and China are going to issue a gold-backed currency and the whole world is just going to flock to do business with Russia and China and save their money in yuan because they would never do what the United States did. I think that's wrong.
No, I agree. Totally agree. Yeah.
So just be careful. I have no problem when people criticize the US explain the negative things and the negative influence that they've had on monetary policies. I completely get it. But I think it's a mistake to then think that those in other places would do better or would be more honest or would be less, confiscatory. I think that risk is out there regardless of where you're at.
Yeah, because of course Europe is also freezing assets and freezing reserves. And I just heard Boris Johnson saying that he wants Russian gold also to be frozen. But I think Russia has all the gold in Russia, so that will be difficult.
Yeah.
But of course you can ban countries or companies from accepting their gold bars, of course. Right, so what do you think of Russia's move to accept rubles instead of?
Well, it's a very important topic, and I want to make sure that I address this properly because I think this is very key. Because I have a lot of people that will tell me, "Hey, Brent, can't you see that the rest of the world is sick of the dollar? Can't you see that they are making these moves to de-dollarize? Can't you see that Russia is doing this and China is doing this?" And the first thing I want to say is, yes, I absolutely recognize it. I get it. What I want people to understand is just because you want to do something doesn't mean you will be able to do it. Just because you have a plan doesn't mean that plan will work out, right? And so as an example, there's always been official monetary systems and or official economies, and there's always been black markets, right? In every city you go to in the world, there's the above ground economy and there's the below ground economy. And the below ground economy is always there because it's trying to get away from the rules and the regulations and those restrictions, right? And so just like over the last 5 to 10 years, Iran had a number of sanctions on them, and there was ways to kind of get around it. Same thing with Turkey. Russia had sanctions put on them. There's always ways to get around the sanctions. But if you look at the economies of those countries who have had sanctions on them, they haven't been raging successes, right? So it's not that business can't get done. It's just that it's very hard to do it. It's not as efficient and it's not as profitable. So with regard to Russia now, one of the arguments that was made to me over the last few years is the U.S. can no longer build a global coalition to go on with to accompany them in their bully tactics. Well, if the last couple of weeks didn't prove that wrong, I'm not sure what will, because they just built a coalition of countries all over the world that signed on with them to sanction Russia. And the sanctions that Russia is now under are the most severe sanctions that have ever been dealt to a country outside of wartime. Now, you could actually argue we're in wartime, but my point is that, part of the reason that Japan attacked Pearl Harbor is because they had severe sanctions put on them, and they felt like that was their only option. The sanctions that have now been put on Russia are more severe than the sanctions that were put on Japan, 70 or 80 years ago. And so I think it will have an effect on their economy. Now, when those sanctions were put on, and when Putin and Russia invaded Ukraine, and then the subsequent sanctions were put on, the Russian stock market collapsed and shut down. It just opened today, and the prices are up from where they closed a month ago, but they're still down dramatically. The ruble at one point was down 60 or 70%. I think now it's down 30 or 40. So it's come back, but it's still down dramatically. The point is that the sanctions do have an effect. Now, subsequent to this, Putin has come out and said, well, you know what? We're not going to sell our fertilizer. We're not going to sell our energy. We're not going to sell our other, rare earth materials, whatever it is. They're a huge supplier of commodities to the rest of the world. And they're saying, we're only going to sell these in rubles. Well, there's two ways to look at this. Now, clearly that is a strategic move on his part, but it's a reactionary move. Now, if he would have come out before he invaded and he said, you know what? Surprise everybody. We are now not going to sell any of our stuff except in rubles. That probably would have been a surprise. And that probably would have thrown some people for a little bit of a loop. And that could have been seen as like, oh, that's pretty smart, right? Now I'm not saying that it's not a smart move, but this is a reactionary move to the sanctions that were put on him. People talk about the inflationary pressures in the United States, the inflationary pressures in China, the inflationary pressures in Europe. Russia has inflationary pressures too. And when their currency went down 50%, inflationary pressures exploded. And in the same way that if inflationary pressures cause political disruption in the domestic economy of the United States and Europe, when your purchasing power goes down 50% and you're Russian, that makes you think about Putin a little bit too, right? If he's supposed to be this great leader and this great general, how come he just stole 50% of my purchasing power? Now, I'm not saying that they're all going to revolt against Putin. I'm just saying it makes you think. So in other words, all of the things that people fear could happen to Western Europe and to the United States, which I agree could happen, that has already happened to Russia.
Yeah, but
right?
Russians are used to it. They are used to having sanctions.
They're used to it.
Westerners they're woke. They can't handle that.
That is fair. That's a fair assessment. And I think it will be probably harder for the West to deal with that than Russians. But the point is I think that, one of the reasons that Putin did this is he has to shore up his currency a little bit. He can't just let his currency collapse. A currency collapse is the worst thing for any government. I mean, that's when you just totally lose control. So I think he's doing this as a way to shore up demand for his ruble, and it might help. But I don't think it is the game changer that's going to checkmate the West the way some others have said it is. We always have to wait and see how it goes. And I'm not denying that it has the potential to cause problems for the West. I'm just not yet convinced that it's the checkmate that some other people have made it out to be.
Right. Yeah. You tweeted that it's a reactionary move and not a 3D chess move that some people think it's. So it doesn't also really affect then your milkshake theory.
No. So this is. I'm glad you asked that, because I think this is what. Again, I think what people miss about my milkshake theory is that they don't understand that the milkshake theory, it's multiple chapters. Right? They like to focus on the second to last chapter. And in the second to last chapter, the dollar goes a lot higher. On a relative basis, the US is a safe haven versus the rest of the world. And US asset prices rise versus the rest of the world. But that's not the end of the book. And and I don't think that that's going to last forever. I think that's what leads up to the last chapter. And in the last chapter is when it all comes home to roost in the United States. And all the bad things that happen to the other countries now start to happen to the United States. I just happen to think that the collapse, the crisis, the sovereign debt problems, however you want to describe that, I think it starts on the outside and works its way in, right? I don't think it starts in the middle and blows up. Yeah. I think it collapses inward. And so, to your point, the West is not used to dealing with collapsing currencies and inflation
shortages
shortages. I mean, that's perhaps normal in many countries around the world, and they're used to it. They're not used to it in Chicago, right? They're not used to it in Omaha. They're not used to it in Tucson and LA. But
Amsterdam.
But they may have to get used to it. Yeah.
So, but one of the final chapters then before it actually takes place in America is then Europe also defaulting, or what do you expect of the euro then?
Yeah, I mean, first thing I say, I love Europe. I don't wish this on anybody, but I ultimately think that the European Union will crack. I don't think it is going to last. And there would be certain countries that I think will break first. And I just think there's too many problems on the table for everybody to agree, for lack of a better word. And when when everything's fine and everybody's making money, it's very easy to agree. When things are going bad and people are getting hurt and people are losing money, now you start to, when you did that, you start remembering things that people did a month ago or a year ago that you just haven't quite forgotten about. And so I think Europe comes under tremendous pressure. I think they have very little growth in Europe. They have high inflationary pressure, so they're getting squeezed from both sides. This is happening all over the world. I think it's especially acute in Europe. And so, I don't think that the European Union is going to be able to raise rates sufficiently in order to fight inflation. And so I think costs will continue to rise, revenues will continue to fall, and profits will continue to shrink as a result.
Wow. Okay. Well, that's quite gloomy. I'm based in Europe, of course. So
sorry.
Well, that's a final question then, because it sounds like it's more about survival than thriving over the next few years. So as a European, should I get dollar exposure then? Should I just start buying a US blue chip company stocks or?
So yeah, one of the things to always consider, it depends on, for anybody out there who's listening, and it really depends on what's your home currency and where you're located, right? What are you measuring your net worth in? Are you measuring it in dollars, euros, yen, lira? It kind of makes a difference. I'm of the belief, so I think there's a couple of ways to look at this. I think it's possible. I don't know how, but I think it's possible that the whole world just somehow, maybe a new technology is created and the whole world grows together. In which case, I think one region might outperform the other, but everybody's growing. So in that instance, I think it's okay to have your assets in the United States. I think it's possible over the next couple of years where the US does okay and the rest of the world does not, in which case it's okay, it's better to have your assets in the United States. The third case is that the whole world goes down together, right? And in that case, I don't think the US will fall worse than anybody else. So still on a relative basis, I think it's okay to have your assets in the United States. The fourth possibility, which I admit is a possibility, but I think it's extremely, extremely low probability, is that the US goes into a massive recession and the rest of the world does great. And it's only in that last case where you would want to keep your assets outside the United States.
Okay, but it's low probability.
But I think it's again, I'm not saying it's impossible. I just think it's extremely low probability. So if I was living in Europe or if I was living in Asia and I had the ability to invest around the world, I would rather invest in the US, where I think on a relative basis, the growth will be either equal to or better than the rest of the world. And I think that currency is going to appreciate against my home currency. And so and I've used this example before, but let's pretend you live in Amsterdam and you use the euro and you buy Coca-Cola, right? And let's say Coca-Cola just goes flat, doesn't go anywhere for a year. But if the euro goes down 4% and Coca-Cola pays you a 4% dividend in dollars, you've just made 8% in euro terms, right? Not amazing return, but not horrible, right? And so, the flip side is maybe Coca-Cola does okay. Maybe they go up 6 or 7%, and maybe they pay you 4% dividend. And maybe the euro goes down 10%. Now, all of a sudden, you've made a 20% return. Now, it's possible that Coke goes down 3 or 4% or 5%. But again, if the dollar appreciated 4 or 5%, you're even.
Right.
Only in the situation where the euro rises against the dollar and Coca-Cola does really poorly, do you really lose? And I just think that that's unlikely. It's not impossible. So I'm not saying go out and put all your money in Coca-Cola. I'm just saying that, when you think of it on a relative basis and what the currencies do to the returns, I think it's important to consider the strength of the dollar. And that's the other thing I should point out. Sorry, I know I'm kind of jumping around, but a lot of times when I talk about the strong dollar, what I mean is versus its peers, right? It doesn't necessarily mean it will rise versus gold. It doesn't necessarily mean it will rise versus oil or copper or nickel or wheat or corn or soybeans or Coca-Cola. But typically when you measure things against its peers. If you said I was tall, it wouldn't be fair to compare me to a tree or a building. You would compare me to other people, right? If you were said this racehorse is fast, you wouldn't compare it to a locomotive or an airplane. You would compare it to other horses. And that's the point that I like to make, is that the dollar will remain strong versus its peers, but it doesn't mean you should just sell everything you own and go sit in dollars. You can still own assets, but just be smart about where you own them, how you own them, and in which currency they're denominated in.
Yeah, well, great advice. Well, thanks, Brent. This has been amazing. Any other things you want to add to the conversation?
The last thing I would say is, I mentioned earlier that it's possible that, overnight they come out and they write down the dollar, in which case the milkshake theory will be completely wrong. I admit that that's a possibility. And as a result, I own gold. My clients own gold. I think everybody should own gold. I don't necessarily think in dollar terms that it's going to do amazingly well right now. But in terms of other currencies, I think it will do better in other currencies than in dollar terms. And I own gold for insurance. I don't necessarily own it so that I can make a bunch of money and go buy a Ferrari with it, right? To me, it's insurance. It makes sense for everybody to own it. If it goes down a little bit in the short term, that's okay. I think before it's all said and done, in this penultimate chapter that I mentioned, I think you will see dollars and gold rising together versus all other currencies. And eventually gold will win and the dollar will be written down. So when people hear me talk about gold, sometimes I'll say, I think it's going to go down or whatever. And therefore they think I'm bearish on gold. I'm not bearish on gold, but it doesn't mean I'm not opposed to doing short-term trades from time to time.
Sure.
But I think gold is an essential part of an overall diversified portfolio. And, regardless of which currency you're in.
And earlier you said you don't believe a Bitcoin standard will happen in an international setting. Do you think it's wise as an individual to have some Bitcoin exposure?
I've done a lot of work on Bitcoin, and I've ultimately decided that it's a very speculative asset. Perhaps it will do well. I think that there's a big battle to come between governments and digital currencies. And I think that the governments are going to be more successful in fighting them than the average Bitcoin person thinks that there is. And so I own a very, very small amount of Bitcoin. Some of my clients own Bitcoin, and I've helped them, assess the risks and opportunities. I'm not going to say it's impossible, but I don't see that as very likely.
Okay. Well, I'm humbled that you've been on my show, Brent. This was very interesting, amazing. So thanks a lot for making your time available. Where can people find you?
So I'm pretty active on Twitter. Actually, can I make a point real quick? That just reminded me of something.
Yeah, sure.
I'll make it quick. It goes back to the whole Russia sanctions thing. People said now that the US and the rest of the world has sanctioned Russia, they are no longer going to trust SWIFT. They're going to stop using US dollars and they're going to go to a new system. Well, over the last couple of years, Twitter has sanctioned people. They've closed down their accounts. They've said you can no longer do this, but people still use Twitter. And the reason people still use Twitter is because that's where everybody's at. It's got an institutionalized effect. And even though I don't like it when Twitter does, sanction people or censor people, I still use it because that's where everybody's at.
Yeah.
And I kind of feel like that's kind of like the dollar system. I get it. You don't have to like it, but you go there because everybody else is there, and that's the dollar system. So that's a long way of saying that I'm pretty active on Twitter. You can search for me, Santiago Capital, on Twitter. You can go to YouTube and type in either Brent Johnson, Santiago Capital, or Dollar Milkshake, and you'll get more hits than I think is probably wise to watch. But you're welcome to dig in.
Yeah.
But I really appreciate you having me on. I'm happy to come back. I always like talking to people who are smart and thoughtful and trying to help others. At the end of the day, I'm trying to help people. If they agree with me, that's great. If they don't, that's fine too. But hopefully we can all get through this together.
Yeah. Well, thanks a lot, Brent, and I'll make sure to put everything in the show notes where people can find you. And I definitely advise people to follow you on Twitter and learn a lot from you. So thanks again, and let's do it again in the future.
All right, happy to do it.